Hello, this is Matt on the Moon Lambo channel. Certain altcoins are showing signs of breakout after the Fed today cut interest rates by 0.5%. And this comes at a time, by the way, when XRP is doing, and has been doing, exactly what it needs to do, exactly what you'd hope and what you'd want. Because look, XRP likely found a bottom against other market-leading coins 3 months ago in June, and has been outperforming since. Now, in this type of environment, historically, money flows into risk-on assets, such as XRP, so there are lots of reasons to be very excited, and I want to talk about a number of macro reasons, especially since the big news today has to do with the rate cut, why all of this, in all probability, is going to be absolutely fantastic for the coin that I care about most, and I'm sure many of you care about most, which would be specifically XRP. Not only is it primed if you look at its individual charts, if you look on a macro scale, everything is unfolding to this point in a way that should it should allow for market expansion, and you better believe XRP is going to be a part of that and a forceful part of that should that unfold. But before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. Now, as I record this video, it is 11:17 p.m. Central Time, my time zone, on Wednesday, September 18th, 2024. We have XRP at 58 cents, Bitcoin up a bit at a little over $62,000, and so we, not surprisingly, have seen some interesting volatility today, but not a crazy surge for Bitcoin or XRP. Now, that's not to say there haven't been some coins that have moved up precipitously. Here's a post from on-chain analytics firm Santiment. They shared this screen grab, and they also wrote, altcoins are showing signs of a breakout following the U.S. Fed's decision to cut interest rates by 50 basis points, which of course is 0.5%. And then goes on to cite a number of coins. Phantom plus 11%, Sui plus 8% are notable assets seeing many surges. Meanwhile, assets with rising whale transactions number include, and then he goes on to list a bunch on your screen if you want to read them, but I'll skip just for the sake of time. And so this, I know that that's not specifically XRP, and I don't know any of those, actually. I don't really know anything about them, but of course there's tens of thousands of coins, so I don't know anything about most of them. That shouldn't be surprising. But there are very clear signs of life here in this asset class, and I wanted to highlight this because it points out that the market, right or wrong, perceives the rate cut here as a net positive. And they might not be so crazy for feeling that way. And I want to spend some time talking about this. And so there's articles like this shortly after the news broke about the rate cut, and Bitcoin had been climbing. Now it's over $62,000, but here's a headline from the Daily Hodl. Bitcoin taps $61,000 as Federal Reserve slashes interest rates for first time in 4 years. Now, I want to share with you some thoughts on this, and I'm going to share with you a summary of part of what was cited by some people that I really, really trust. Because mind you, I'm a regular dude, just like the rest of you listening, right? I'm not a financial advisor. I have financial advisors. And so there's a firm that I've been using for a while for a portion of my retirement when it comes to investments. And I'm not talking the crypto stuff. I'm talking about, the more boring stuff. It's stocks. And a lot of it, frankly, is just, ETFs that track the S&P 500. And there's some other stuff that you can do. Like, for instance, you can do more of an indexing approach, which tracks the S&P 500, where you're actually buying the individual, buying and selling the individual stocks, tracking what the S&P 500 is doing, so that it's for tax purposes. You can show losses rather than if it's just an ETF, because that's you're talking about a basket of goods, but you're just buying the ETF rather than the underlying asset. So there are things that you can do. Suffice it to say, I won't get into the weeds. It's not the point. It's outside the scope of this video. But the firm that I'm referencing here, which I personally use, they recently sent out a mass email, and they happen to be talking about this exact topic, and they're just sharing data and saying, here's what historically has happened. And so you can come to your own conclusions from there, not literally promising anything, because you can't. You literally can't. Actually, in their profession, that's illegal. Like you literally can't, promise specific outcomes. But in terms of, hey, here's what's happened in the past, we're leading you to the water. Do you want to drink? It's that type of approach here. And so I just want to share with you some of the points from, and I'm not going to share the whole post from what they wrote because frankly it's kind of lengthy. So I'm just going to share with you some thoughts on this and some of the things that they cited that I found to be most interesting in this. But the narrative that rate cuts are always bad, frankly, it's just not true. Okay, so the timing and size of rate cuts, I understand, like that's been up for debate for weeks now, especially leading up to this, right? Would there be a rate cut? If so, to what degree? Well, we now know the answer is yes. We know that the first one is 0.5% and that there's indications it's going to persist probably for the rest of the year and throughout 2025. So rates going down, right? But you see, what matters more to investors is why rates are being cut. So frequently the Fed lowers interest rates in response to a weakening economy, making it less expensive to borrow for businesses and individuals, right? And then that money, of course, gets spent or invested in the economy. That's the point. It's with the hope and expectation being that economic growth would come to be that otherwise would not exist. That's the reason for doing that. However, over the past couple of decades, and this is what has been talked about very broadly, certainly in the world of crypto, over the past couple of decades, the Fed has issued dramatic rate cuts in response to absolute calamity. Implementing rate cuts, in response to disaster is different than implementing rate cuts in an environment where, there is a small amount of economic weakness. So consider the fact that some of the most recent rate cuts were in response to, for example, the dot-com bust in the early 2000s. There was also, of course, the global financial crisis in 2008. And most recently, in response to the pandemic just several years ago, literally. So historically, when the Fed has cut rates, it was usually in response to some sort of outright disaster. So it should not be surprising that market collapse, and or recession followed immediately or relatively soon after rate cuts. There's a reason that there's that correlation. It's not the rate cuts themselves that cause it, though. And actually, interestingly enough, rate hikes, they usually occur while the market is booming. And that probably sounds counterintuitive, right? It's like rate hikes occur when the market is doing well. What are you talking about? Why would the Fed increase rates when the economy is doing well? Because that should just decrease investments and result in less economic activity, right? Well, that's true, but this may be done out of fears that inflation can get out of control. Because if there's too much demand and not enough goods, well, yeah, that can happen. That's how inflation comes to be. But today, inflation, at least now, directionally, what's it doing? It's on the decline. And there is no emergency today. There is no economic collapse at hand. We're in a period, actually, of steady growth economically. So, and it's true, and of course, certainly we'll acknowledge this, as my financial advisors acknowledge, they're like, yeah, so we're in a period of steady growth, but it is growth that's slowing. That's true. But is that a calamity? Is that disaster? Does that mean everything's just going to crater on down? Well, historically, that's not really the case. And so this is why it's crucial to consider each individual situation rather than making a blanket claim that rate cuts are usually bad with the implication or outright assertion that this means rate cuts will be bad for us investors in the stock market and in crypto right now. So the environment we find ourselves in now is more similar to what was experienced during the implementation of rate cuts in the 90s, like from 1994 to 1996. There were inflation fears, the economy doing well, but inflation fears. So what did the Fed do? The Fed raised rates and then ultimately lowered the rates soon after that. So what did the Fed do? That means the Fed successfully cooled the economy without causing a recession outright. There was no economic emergency per se in the mid-90s, but the Fed reacted, right? So isn't that more analogous to the moment in time we find ourselves in? I would argue yes. So, of course, if there's some sort of black swan event, some way unforeseen thing that we just couldn't imagine, it's not on the radar, well, then yeah, this time will be like what happened with the dot-com boom and bust and the global financial crisis and the pandemic. It'll be just like that. But, a black swan event by definition is kind of unknowable, right? So unless you want to make the argument that not only are we heading into a recession, but it's going to be an outrageously deep one, and it's imminent. I mean, if you want to make that argument, go ahead. But I mean, is it truly, are you talking it's going to be on the level of some sort of disaster and calamity? And is it truly imminent? Like truly imminent? I mean, if you want to make that case, go ahead and make the case. I haven't really seen sufficient evidence to believe quite that, right? And so even if you look at the labor market, I mean, and all this, and like, if all of this is factored in to what my personal financial advisors were talking about here. And so, again, they weren't promising anything. They're just saying, with this current environment, here's what it is. Historically, here's what has happened. And so they're clearly leading in a particular direction, though. So the people that are saying, hey, actually, this isn't like what's happened over the last few rate cuts, I find those arguments compelling. So if we are going to see something disastrous happen, if that's what it means, because we just got the rate cut, I would like to hear that argument, and I am open-minded. So I'm leaning in a certain direction, but if you've got a persuasive argument, I want to hear it. I can be persuaded for sure. All I'm saying is right now, if I had to go in a certain direction, would I say that this is going to be like what happened with the global financial crisis in 2008 or the pandemic? Well, no. Because if you believe that, what's the compelling case for that? These do not seem like similar things to me. They seem like different animals. And so that's why I'm saying what I'm saying. And the reason I'm taking the time to talk about this is because if that is indeed the case, and if what's most likely is that you're not going to see things just crumble and fall apart, and you are going to keep seeing an increase in liquidity, there are going to be a lot of funds that are allocated to the stock market and crypto and going further out the risk curve. And I actually do want to talk more about the liquidity thing in a separate video coming up probably soon, maybe tomorrow, later today, I don't know. But, well, I guess it would technically be tomorrow. But be a little far outside the scope for the purpose of this video. But in looking at this, I mean, there are all sorts of examples. In fact, lots of people are talking about this. So here, let me share with you another post. This is from an analyst named CryptoCon, 104,700 followers on social media platform X. Shared this chart, rate cuts and S&P 500 price action going back to the early 70s. Actually, technically the late 60s. And he wrote the following. U.S. federal interest rates are set to be cut today for the first time in 4 years. And so I'll pause and note, this is at 12:30 p.m., so technically before the news, but we know what happened. Some people have already written down a guaranteed recession to follow. If you look at the past 20 years, it can definitely seem that way, too, with enormous downturns after rate cuts in 2000 and 2007. There was also the 2020 Black Swan after rate cuts, which I would say is coincidental. But look back further, and you'll realize it's not so simple. In fact, 2 rate cuts in 1984 and 1995 led to an immediate explosion in growth for the economy. A couple of others, 1980 and 1989, had smaller positive growth following. Rate cuts do not equal economic downturn. They have in the last 20 years because they were paired with unsustainable growth from 1995 to 2000 and extreme borrowing during the 2008 housing crisis. The market had a full and healthy reset in 2022. Recession and doom predictors will never make it over time. Okay, I find the argument compelling. It doesn't mean that I know for sure what's going to happen. Nobody does. Anybody that tells you they know for sure, they're just, maybe they got an ego, I don't know, undeserved confidence, something. But if you're talking about, certainty, does this mean it's bad? Well, that narrative, which I have seen from some in the crypto space, that is not true. It is not true that with certainty, the fact that this happened, based on history, we should believe that it's a virtual certainty that's going to occur. because even if most rate cuts have been at a time that correlates with negative economic output, okay, fine. But then when you dig in and you look at the unique circumstances, you find that those instances, they were almost all in periods of outright disaster and calamity. Is this an outright disaster or calamity that we're in right this second? Well, it doesn't look like it to me, even though, again, like I just said, labor market is what it is, and economic, there does seem to be some economic slowdown, which means that there's growth still, by the way. It's just the rate of growth is slowing down. Okay. Well, that's why the Fed is doing what they're doing, though. They're reducing rates now so that the economic slowdown, which again, it's growth, but at a slower pace, they're reducing rates with the expectation that it will cause regular people like you and I to borrow more money to go do stuff to spur the economy. It'll cause businesses to take out additional loans, expand business practices because it's at a cheaper price. And of course, the lower something is in price, the more people will be attracted to it. Very basic economic principle. So the lower the interest rate, the more likely people will be willing to take on that risk. Whereas on the flip side, if it were 90%, probably almost nobody would. So it's a simple concept, right? So the lower it gets, the more people will be like, well, okay, that's just low enough, I'm willing to. So even if we're seeing a little bit of an economic slowdown, their hope anyway, and we'll see how it pans out. I'm not pretending to know the future. I'm not predicting outright anything. If that's successful, if there's a little bit of a slowdown, maybe this will be enough. And by the way, it wouldn't be instant, by the way. Once you see a rate cut, really, it could take you the better part of a year to see that really flow throughout the entire economy. It's not the case that, hey, the announcement's made, and then everybody today or tomorrow is like, I'm gonna go buy something with the loan. Blah, 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 blah. That's not how humans act. But over a span of a year, given that the rates will be what they'll be, more humans would than otherwise would over that period of time. Factor that in with the expectation that what's most likely is further rate cuts this year and throughout 2025, and that'll continue to impact additionally over time. Well, let's just see what happens then. Let's keep watching. But the idea that what's most probable is some disastrous collapse here, I understand that chart analysts have the opinions that they have, but from a macro perspective, I don't see a compelling case for why we should expect that. And I know the chart guys, they'll put up a fractal and be like, here's whatever from whatever period of time, it looks very similar, down we go. Okay. Do your fractals, that's fine. I'm just saying from a macro perspective, it's not the same as the last few times that we have had precipitous drops. That's why, again, if you want XRP to be worth a freaking fortune, and I do, I certainly hope this is the case. I do find that argument to be more compelling than the alternative, though I'm not saying I'm 100% certain. But I do find it compelling, right? And if you don't think it's compelling, that's fine. I'd actually be curious as to what your argument is to the contrary, very genuinely. I can absolutely be persuaded. Maybe you've got some data that I'm just unaware of. That would be fine. But to this point, I haven't seen it. I've been seeing all sorts of perspectives like this. And there's this, I'm not going to read this whole, this is another perspective. This tends to agree with this thought process. It's from Charting Guy. I'll read part of it. He said, I keep commenting this back to people, so let me make a dedicated post. Rate cuts are not inherently bearish. People only think we've had rate cuts in 2001, 2008, and 2020, LOL. Those 3 rate cuts cycles were due to a collapsing economy. We do not have that issue at this time. People completely ignore the dozens of other rate cuts throughout history that were bullish. And then he goes on to list a number of years. So there are a lot of people that understand that and believe that narrative. And I do find that more persuasive than not. So again, if you don't think it's persuasive, I'm open-minded, but tell me why not. So I look at this and I see everything else happening, and I just get excited for what's going to happen in all likelihood later this year and throughout 2025, because if we have true market expansion, if this is something that's going to help potentially to propel it further, cheaper capital, great. I don't feel afraid at this point, but you guys let me know what you think. I think it's one thing that's going to help XRP rocket further. That's, again, the reason that I took the time to go through this. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.